Hello, everyone, and welcome to the HUBB Live Trading Room. My name is Zach. Most of you are likely familiar with me by now, but for those that are just new or joining us for the first time, welcome. It's great to have you with us. We had the EWO Trader Live earlier a bit today and discussed that there's more tariff talks on the horizon, but no Tantrum as of yet. So let's go ahead and get right back into it. Rob, you out there?
I am Zach. Long time no see. Welcome everyone to the HUBB Live Trading Room. For those of you that weren't with us for EWO Trader Live, we'll do a quick update here on where the markets are. If you were with us, we'll update you as well. We're still holding above the 10-day moving average. As Zach said, no tantrum with all the tariff talks that Trump's going to be apparently putting on steel. We'll see again if it's negotiating ploys, but he seems pretty determined this time. I thought I would go ahead and look at the intraday chart real quick. We go back and look at the 3-minute chart. You can see that kind of all the action occurred pre-market. The futures ran up, the market opened, and we've just been kind of treading water since then. We're going to bring it in and see if there's a intraday Elliott Wave pattern, and there is. You can see that we completed the wave 5 from what started pre-market here around 10:30, just before we did the EWO Traders show at 11 o'clock. So just came down to the bottom of the tap box and have been going sideways. So very typical 5-wave pattern. Again, it works the same way regardless of the time frame. This is the 3-minute chart, as I mentioned. So the wave 5 ends, you go through a corrective phase. We had a zigzag here, and now perhaps that was a wave of a big flat. Who knows what's going to happen? Again, you let the next pattern show itself. Once a 5-wave pattern ends and you go through your corrective mode, then you look for the new impulsive pattern to begin. It's kind of where we are now, so we'll have to wait and see where things end at the end of the day. All right, so let's start talking about AI stuff. Zach, pardon me. Zach did that to me.
I jinxed you. Yeah, apologies there, Rob.
Yep, we got through EWO okay. Oh, goodness. Apologize, everybody. I know that's annoying. Let's get into the AI signals that occurred from Friday. So you can see we have one here, LNC, at a 78 score. This has come up before. Lincoln National is a symbol. Now it is up again today. You can see the arrow shows you when the signal day was. So that was Friday after Friday's close. But the fact that we're up again, pardon me, this morning makes it a little more challenging because of the separation from the 10-day moving average. You all know the rules by now. It's too vertical, too far from the 10-day moving average, which is frustrating because it does look like it's set up really well. If we go to the DMI, very supportive on the DMI. The ADX breaking up, about as supportive as you would, pardon me, want to see anything occur. So let's go ahead and take a look at the options and see what the options look like. If there was even a possibility here. So we wouldn't want to do February. We only have monthly options available here. So let's go to April, 68 days out. We'll spread the chart out and give us some more strikes to look at. There is some open interest, as you can see, even some activity today. That's the volume is today, but I like to switch this to Delta, as you know. And 35 Delta has 1,000 contracts. It's only trading with a 5-cent spread. All this looks really good as far as doing a potential alert, except for the fact that we have a little bit of separation from the 10-day moving average. Pardon me. Goodness. So that's
You're
what
getting
makes
some
this
empathy in the
tricky.
chat towards your allergies, so I think everyone can understand the pollen's pretty surreal right now this time of year.
Yeah, yeah, it's got everything confused. I think because we were 6 degrees less than 2 weeks ago, and then 3 straight days of 70 degrees and sunshine. So yeah, I think vegetation was a little confused as to what's going on. But just to get back to this, the challenge here is stocks can stay overbought, oversold for short periods of time, and no security in any time frame gets too far from the 10-day moving average. But we could literally run straight up and hit that target, and then come back down towards the 10-day moving average, or we could consolidate now. But just don't want to chase it at the high of the day right now. Maybe things calm down a little bit, but with that DMI, it looks like such a solid setup. And then on top of that, as you know, my favorite directional pattern is when we have a zigzag within the wave three, and we appear to here with the start of the pattern. Remember, every 5 wave pattern starts with a zigzag. That's one of the rules. Look, we came right down to the 50-day moving average, right there around 50% corrective level. And notice that the 100% extension is exactly in line with the AI target, as you may have noted in the past. Obviously, I'm not telling you anything that isn't common sense. Having the zigzag extension at the same price as the AI extension gives you two different um, forecasts, two different systems of forecasting. The AI, remember, only takes into account the first day of the wave three. It doesn't take into account zigzags, etc. The 300 plus data points are all on other things. So when you get an Elliott Wave zigzag and the AI target at the same price, it's just another thing. So there's really nothing to dislike here other than the fact that perhaps we're a little overextended. But we'll watch this for the next hour or so, see if it calms down just a little bit and gives us an entry, because this one does look pretty promising. And with bonds cooperating, seems like the financials would be a pretty good place to be. Then we come down and we see Yum Brands on the other side of things, down around 35. It's also up today. And we can look at FXI for China. We didn't do that during the HUBB Live, I mean the EWO Trader Live show. But with the low score, it's not low enough to fade this. So kind of hard to figure out where this would go. Interesting that the AI score is low, but the DMI looks pretty supportive. However, the AI is looking at some other things that it isn't particularly fond of, but it's not low enough to fade it and go the other way. Then if we switch over and look at the bearish side of things to see what we have there, notice that we still have a lot of symbols that are showing up on the bearish side, and it just shows you this choppy market that we had where some things have been going up, some things have been going down. They asked to look at Elf Beauty during the EWO live trader show. Obviously, that had a big downward move, and it's been an earnings season to where the stocks that haven't come through have been penalized. Those that have been rewarded. But looking at this point in time, you can see that score's just not quite high enough to go to the downside on this, and it's not low enough to fade it. It's just one of those that it's in between, and it's a toss of a coin as far as where things go from here. The one that I noticed that was interesting on the bearish side is we come down here to Skyworks, and you know that they've been trying to beat up Apple. Skyworks coming down and contractor, etc. Right smack here in the middle, but look, it's only a 37% score. So again, we're in between. It's not low enough to where we would think this is what we've been talking about over the past couple of weeks. It's not low enough to look for a move to one of the boundaries. Again, what we're working on to enhance the amount of alerts coming out of the volatility strategy. It's been working really well, but that score is not low enough. And so far, it looks like it's kind of hanging in there sideways. But with a 37% score, you don't want to do anything from a time strategy sideways position either. So that may end up being what it does. But with a 37% score, you don't go to the downside, you don't fade it to the upside. Let's move over and look at the sideways indication. So we take a look here, sideways after drop. There's 7 potential alerts here. Now, one that's interesting is you start to get down on the bottom. So there's ELF that we were asked about during Evo Trader. 30% on the sideways. It's almost to the point where you would want to see that jump back up, which is what we talked about. It's so low, it's leaning towards the fact that this will move to one of the 2 boundary levels, but not quite low enough. The data scientists are pretty clear on that 25% level. And then we have GPRE. Now, this is a different story. It's a 13% score, and it could move to one of the 2 boundaries. But the problem is it's such a low dollar stock. It's just a $6 stock, and the movement is just under $1 if it were to go to the upper boundary, and only about 70 cents or so if it were to go to the downside boundary. So I don't think that's enough to do anything, even though it would be an interesting strangle. Let's take a look at the options here and see what they look like. So February is probably not long enough out, so you would look at March for a potential movement to a strangle. And when we look at where we are on the open interest, you got to go too low on the delta. We could look at a 40 delta there, but there's only 72 contracts. Then we come over here and the minus 31 is too far away. Just as a reminder, when we do strangles, we like to have the net delta between +5 and -5. So you would take a positive 40 delta here on the call, a negative 31 delta on the put. That leaves you with a net positive 9 delta. So that's where that +5 to -5 range comes out. And so that's where we are kind of a little bit outside the range, plus open interest, again, just not quite high enough. The spreads aren't wide, but the deltas aren't there, and it's just not enough of a movement, honestly, to be something that we would want to trade. I do want to remind everybody of the Profit Dynamics course that's coming up. The first edition will be on the 17th. That'll be the first class. So you want to make sure that you're involved in that. So just quick reminder, if you haven't, sign up for Profit Dynamics on the 17th. Is class 1, and the second class is scheduled for the 25th. So taking a look here, not much we can do with this, but it would be a good example to go through when you see a real low score like that and look for the boundaries. You go to the options, see if there's a strangle there. Not quite to the point of sending those out as alerts yet, but very close, about wrapped up. Been working on this for a few months, actually, as an idea, but wanted to build enough practice, paper trades to feel real confident in it, avoiding the IV rush that occurs when the stock drops. So another thing that we've noticed is if wait a day or two, even after these big drops, if the score is low and the likelihood is it's going to go hit one of the 2 boundaries, if you let it go sideways for a day or two, you can draw some more of that IV out, which makes it even more attractive. So if you go sideways for a few days before you make a move to one of the boundaries, that's a pretty good setup, I found, for utilizing these. If we go back over here to NBIX, couple problems here. It's biosciences, so the stuff that we have learned our lesson on and stay away from those. From a sideways standpoint, the score's too low anyway. But even if the score was high enough, just the nature of the sector that the stock is in would be cause for hesitation there. But just you can see, and I think this is what the AI is telling us on these sideways scores. When the score is too low, look at the size of these daily bars. These two bars are a tremendous amount larger than where the stock normally trades. So if we were to get it drop down and then you get this kind of volatility, that's actually good if the score was high enough, because that would keep the volatility in there. That's the exact opposite of what I was just talking about as far as getting a very low score on the sideways search and waiting for some of that volatility to come out to do a strangle, which would be sensitive to higher implied volatility. But when you're looking for a sideways trade and we're selling, whether it be the mid strike in a butterfly or the at the money strike in a calendar, whatever, you want to hold as much of that volatility as you can, so that on the option that you're selling, which is always going to be shorter term or the same time frame if it's a butterfly, but shorter term in a time spread or calendar spread, this would have been a very good setup. Because with the drop down today, they've held all that volatility in there. But once again, not a sector we'd want to be involved in, and the score's not high enough. But just again, talking points that we're going through. We'll go deeper into this kind of stuff during the profit dynamics course. It's a deeper dive. So we do tips during this, but we'll have a pretty intensive course there. And you'll have the opportunity to go back and watch the recordings. Usually when we do those webinars, the one of the fun things about doing these live shows where they're during market hours, for one thing, is good, but they're shorter in duration, and that gives you an opportunity to absorb more of it. When we do an hour and a half webinar, you can't absorb all that information in one sitting. It just, the brain can't do it. And so you get a chance to go back and review the recordings over and over again until it becomes more cemented in the brain. Looking at NWL, Newell brands here, another one that pretty good bar today. So holding the volatility in would have been interesting, but the score is too low. Just trying to set up all these things so when we do have days like today where we're not sure there's going to be an alert or not, you are learning and you know what to do as soon as the scores show up that are qualified for putting on alerts. So we take these opportunities to go through and talk about the rules, talk about what's looked at, the options analysis, everything along those lines, because the whole idea is to educate you on how to utilize this software and utilize the AI alerts. That's the primary purpose of the HUBB Live Trading Room. So not much else to talk about here. We could look at PLRX, but it's another therapeutic, and look what happened here. So low score would have been interesting if we would have had one more day before it did that, but it didn't. But there you go. There's a perfect example of how the lower scores, it wasn't quite under 25. It only took 27, but then boom, another big downward move. So that gives you a little bit of an idea of the possibilities on these sideways ones with low scores. So I thought that would be interesting to show you as well. So we'll go back to looking at the bullish. This is one, again, could possibly come out as an alert today, but we're just going to see if we calm down just a bit over the next hour or so. A little bit of just backing up, getting off this peak would be ideal. And so we may send this out, or we may wait till tomorrow and see what happens if it backs up a little bit. So heavily on the radar for LNC. And once again, we'll give it a little bit of time to see if it calms down, gives us a slightly better entry. It might take till tomorrow morning, but then the risk is that it runs up again tomorrow morning, then it's too close to the target to put anything on. So always the challenge is on selecting whether or not you want to do uh, an alert on a particular uh, issue that has a good score, and as we already saw, all the other features that we like. Zigzag in the wave 3, DMI, very constructive, good open interest on the options. We've got all the pieces in place. The only negative is too much separation at the moment. So we'll see how that plays out. All right, Zach, really not much else to say. Again, we got the class coming up here in a week or so. So I'll bring it over to questions if anybody has any for the AI stuff.
That sounds great. And just quickly on that note, the classes will take place on the 17th of Feb and the 25th, which is Monday the 17th and the following Tuesday, the 25th. As Rob mentioned, all Hub founders will be automatically registered and will receive the relevant invitations. And for any of those who aren't founders, make sure to check your inboxes, as we will have the offer emails coming out shortly if you've not received one already. Question from Jim here. Can we look at DECK, DECK, any adjustment?
Not yet. I was actually looking at that this morning. It was sitting right exactly where we wanted it to be, and then moved down a bit today, down towards the lower end. But with a 71 score is a tiny bit low, but oftentimes you see these, and when they move like this, they turn and come back. So no adjustment yet. We'll watch this really closely, but note we have the exact opposite scenario here, Jim, where the separation is to the downside, where we were just talking about the separation to the upside on the Lincoln National. Exact opposite here. So the expectation would be that we bounce here from that lower boundary, and if we do, then that would work out really well. So nothing to do yet. We'll see if we can get a little bit of a bounce here in the next couple of days, and then we might look to take something off. The spreads are a mile wide, so there really wasn't the amount of profit that it looked like, because they're widening the spreads on this so much. Once they tighten those up, then you'll see a little bit more realistic numbers on where we are. But if we can get a little bit of a bounce back here, I think we could be in pretty good shape. So obviously concerned that we're down this far and down near the lower boundary, but on the positive side, it's a bit oversold short term, and the score would lead us to believe that some sort of a bounce from here is pretty likely. On top of that, when we're looking at Deckers, we're in an area that has just a tremendous amount of congestion. You can call this a resistance line, but then you come down here at support, and the range is so tight from going back at the end of last summer into the fall. The range is so tight on the support resistance lines here. We're all right in the middle of that. Another indication that we should hold here. If we don't, then gosh, that would be a really good bearish trade if we didn't hold here. But with all those factors considered, no adjustment yet. Let's wait and see if we get some sort of a bounce off this support area and off the slightly oversold condition.
Thanks, Rob. A quick review of the triple Qs and SPY for those that might not have been able to attend the recent webinars and miss the beginning.
All right. So the Qs, basically, we're waiting to see if we can take out this wave 3. The wave 4 still not confirmed. So qualified but not confirmed. We're right at a pretty good fib level to bounce off of at 38.2. The key here on the Qs is 510. That's the area of support. And we're kind of climbing higher. As long as the bond market is cooperating the way it is, there is a chance that we continue this bid in the Qs, and we can take out this wave 3 high. The SPY has done it. The other markets haven't quite taken out the high yet, so we'll keep an eye and see where that plays out. So, what was it? The Qs, and what was the other one they want to review on?
And just the SPY.
Oh, okay. Um, yeah, the SPY is different pattern because it has already technically taken out the wave 3 high, but we're forming this triangle here. And the issue that we talked about is if we get an upside breakout, then we can take out this previous 3 and 5 highs, and we should be on our way up towards the middle of the tap box if we can break to the upside. The issue is with a triangle, we can break to the downside as well. And it's not really a short trade unless we come all the way down and break the wave 4. So this would be no man's land if we were to break to the downside. We just have to wait and see if this wave 4 would hold, and maybe we get a few bearish alerts out of the AI signals. That would be great. But as far as generally going short the market, we wouldn't want to do that even on the beginning of a downside breakout because it's just not enough. The triangle's not big enough. And the move down wouldn't be significant enough, I don't think. We'll see how things play out. Things could occur. A black swan event could happen. That makes this a more volatile breakout move. That would change things. Then we could take a look at the downside. But a downside breakout is just going to mean we're going to kind of have to be cautious on that. But an upside breakout could give good confirmation of a continued move higher. So we have to watch this triangle on the SPY real close.
Thanks, Rob. Next up, we have a question from Lana. As GDX is going up, is this back with the old AI prediction? And Jim said, thanks for your analysis on deck.
Sure. Yeah, and the gold miners, remember, this is an adjustment to play catch up, especially with gold going even higher again today. We expect the GDX to move up towards this previous resistance. That's what we're looking at for this. And not quite necessarily the original AI target per se, more on the fact that the AI liked a whole bunch of other data factors included in here. And the expectation is that those play out. We'll look at the DMI here, which you can see is set up really, really well for this to continue higher. So we're just kind of looking for a test of resistance here that occurred back in the middle of October, and then that would likely be the end of our adjustment. But the theory behind it is it needs to play catch up with GLD, and it seems to be doing so.
Very well. Thanks, Rob. Sean wants a review on RUT.
So we oftentimes look at the IWM, but another way to trade the Russell is the RUT. Let's say IWM is the one we normally look at. I don't know what I said, but RUT is another way to play it. Consolidating here, the charts are very similar as far as the consolidation. I drew all the channeling range over on the IWM, but very similar. So the key here is you just got to watch 2300 on the RUT and see if we can break above this level. You could take a look at this as potentially forming an ascending triangle here, not the most well-formed one, because there's a big gap right here. The more times we touch the line, the better. So this little gap here keeps it from being a real classic ascending triangle, but nonetheless, there's a crude one being formed there, and perhaps that's going to give us a signal to break higher. The wave forward just barely holding in there at 71%, but above 78.6, so still technically qualified, and we'll see if we can get a break. We're going to need the bond market to continue to cooperate, I think, for the Russell. It has been the one, along with the IWM that I've been mentioning, that has been very much in tune with the bond market, where there seems to be a separation between the bond market and some of the other equity markets, but the small caps have been performing as expected. So watch TLT, watch the bond market very closely, and that'll give an idea of whether or not we're going to get this upward breakout from the Russell or IWM.
Andrew says, can we look at AMD longer term? It appears to be in a downtrend still.
I would agree with you. Just not cooperating, not using those two letters enough, I guess, as far as the AI side of things. But a pretty well formed 5-wave to the downside pattern. I talked about this before because we've gone a little bit lower now, but the wave 4 is quite short, just at the 23.6% level. And as a quick reminder, if Elliott was here, he would say, you could make an argument that this kind of chart is ripe for a relabeling, since the wave 4 barely made it to 23.6. It was his analysis that oftentimes that's more of a blip when you go to the 23.6% level and an overall downtrend. So if Elliott was here, he would say there's a chance, it may not, but there's a chance that this relabels and this big move down all becomes a wave 3. So that this 5 relabels to a 3, and these were just bounces in between, because you can see the 4 is here, but it was up there and it just moved there. And we're just continuing to zigzag literally our way downward on AMD. Now 100 would be a level to watch to see if we could get some support off that round number, and a little further extension on the wave 5. But you can see where the tap box is lurking down here. So if we did relabel to where this was a 3, then I think at some point we could come down that far, believe it or not. But in the meantime, we could get some support off this 100 level, not just because of the big round number, because it actually is longer term support as well. So there's just, I know a lot of people are itching to go long AMD, but you're just not there yet. We just got to wait and see if we continue down, and maybe we get the bounce off 100 and we can do something there. If we do continue lower, if we take out this wave 5, I will be interested to see if the 5 continues on the downside, or if we relabel to a 3. If this is indeed a wave 5 that's finishing, then perhaps the 100% level, or I mean the $100 level, gives us a bounce back to that previous 4, and that could be a nice upside trade from there, from 100 up to about 125 or so. You could have a nice bullish trade, but I don't think the entries right now, not when it's in this much of a downtrend, and we're below the 10-day moving average. But certainly bears continuing to keep on a watch list.
Alrighty, so just a couple minutes after time, we'll wrap up with this last question here from Chris. Comment on AIT, which you were close to alerting on last week.
So here's AIT, and you can see that we have this pretty nice movement to the upside here. It still looks pretty good, and would like to see a little difference out of this ADX. Even the 2 directional indicators aren't really cooperating, hence we haven't sent out the alert yet, because the DMI, this has not been a real vertical move here, but it's the 45-degree angle that I really like. And oftentimes those just continue to churn in that direction, and they work really well. But by this time, you would want to at least see the ADX leveling off, if not giving some sort of a turn to the upside, and is continuing to go down. So there's divergence here between this move higher and the ADX going lower. So price is going up, but the strength of the move is going down. So that's the divergence that's creating the pause, and whether or not we want to send something out. So we'll see if the CCI is giving us anything different. And when you look at that, it's not either. Notice that we have divergence here as well, with these 2 lower highs in the CCI as the stock itself is moving higher. So with all those things playing out, we're still watching it, still keeping an eye on it, but the confirming indicators are not giving us what we like to send out an alert. The pattern looks great, just the churn up. But we need to see some of the indicators show that there's legit strength to this move. Just because it's moving higher is not a reason to put on the alert. You want to have some confidence because trading's hard enough as it is, but you want our indicators to give us some confirmation that there is some strength to it so that it's likely to continue. And we don't have that yet. So at this point, you would be real concerned about running into resistance at 275 and that holding and not going higher. So we'll continue to monitor this one and see if we can get some sort of confirmation out of our confirming indicators. But until we do, we just have to keep watching it. Even if it churns higher, that's okay, because without those indicators showing their strength to it, it's susceptible to roll over at any point in time. All right, Zach, thanks for all your work. Again, I apologize to everyone for the sneezing in the beginning. I appreciate you and your well wishes, but I do know that all that stuff's annoying to listen to, and I apologize for that. But we'll get back to the market. We'll keep a very close eye on LNC, see how that trades over the next hour or so. That's the one that's on the hot list as far as a potential alert. Thanks for your questions as always. Let's get back to our trading day. Zach, again, thanks for everything. And we'll see everybody tomorrow during Trade Finder. So have a great afternoon. Take care, everybody.